Hi, everybody. This is Alan Ellman, the Blue Collar Investor, and welcome back to our Beginner's Corner Information Series, the second edition. This, ladies and gentlemen, is Lesson 8, a step-by-step process for mastering covered call writing. And let me congratulate everybody that's made it through the first 7 lessons. We know that you're very highly motivated, and that's the secret to success. In the first 7 lessons, we went through the entire process, and today we're going to put it all together in one video. That said, let's get started. There are 3 prongs to successful covered call writing, and we must educate ourselves to master all 3 of these required skills. And those are stock selection, what is the best underlying to use for our option selling strategy. And remember, we did a 3-pronged process to determine the best stocks. Then we look at options. What are the best options to sell against these securities? And finally, once we're in the covered call position, how do we manage or execute exit strategies when those opportunities come by? So the education comes first. Then we practice or paper trade. So we set up a hypothetical account with an amount of money that we think we're going to be investing when we do get started for real, and then we manage those positions as if we were actually trading with our hard-earned money. Once we've educated ourselves and paper traded, now we're ready to get started generating cash flow for years and decades to come. And this will allow us to beat the market on a consistent basis. Let's review the stock selection process. It is a 3-pronged process for screening that will give us a elite list of performers eligible for covered call writing. The first step is fundamental analysis or sales and earnings growth. We like to do fundamental analysis first because the institutional investors, the mutual funds, hedge funds, banks, insurance companies, love stocks that have strong sales and earnings growth. These are the guys that move the market, not us. So we do fundamental analysis as step 1. We also do a technical analysis. We look at a price chart. We want to identify trend and momentum. If you recall the 4 parameters that I use, and feel free to use your own favorites, but the ones that I use are exponential moving averages that identify trend, the MACD histogram, which identifies both trend and momentum, the stochastic oscillator, which identifies momentum, and we confirm with volume. In addition to fundamental and technical analysis, we also look at the common sense principles, like asset allocation, diversification, and avoiding earnings reports. Once a stock has passed all 3 of these screens, they are on our list for eligible securities for short-term option selling. For our premium members, we do these screens on the top blue bar. You could see that this consists all of the fundamental, technical, and common sense screens that we use. And we also give additional information like dividend information, ex-dividend dates. We give the earnings reports dates. Our weeklies available, option liquidity, and things of that nature. So whether you set up the list the way I do for our members or you do it differently, it should be a high-quality list based on the screens that we just discussed. You can also select from the best performing exchange-traded funds. And here's a screen of a chart that came from one of our lists, for premium ETF list. And you could see that the 3 securities on the top are all outperforming the S&P 500, which is that bottom blue line. And there are other requirements too, like minimum trading volume. But again, you could use stocks or you could use ETFs, depending on your risk tolerance, the amount of cash you have, and how much time you're willing to dedicate to this strategy. And either way, it won't be a whole lot once you've mastered the 3 required skills. Now, once we've set up the list of eligible stocks and we've made our selections, we can then look at the options, because we don't enter a trade unless we know that the options can return premium that meet our goals. So the first step is to determine the moneyness of the strike, whether it should be out of the money when we're more bullish or in the money when we're more defensive. Now, once we've made that determination, we access an option chain, and that every broker has an option chain. You can go to free sites like finance.yahoo.com and look for the options chain, and depending on the moneyness, you look out of the money or you could look in the money, and then look at the option premium, feed it into the multiple tab of the Ellman Calculator to see if the returns meet our initial time value return goals. And that's how we select an option, the moneyness, and then whether or not it meets our goal. We have to factor in common sense principles like allocating a specific amount of cash per position. We don't want to be too heavily weighted in cash in one position. And also we want to be adequately diversified in terms of stock and industry. Okay, so once we've selected which stock and option we want to use, we execute our trades. There are two ways of doing that. We could leg in, buy the stock first, and then sell the option. That's the most common. Well, some brokerages have what's known as a buy-right combination form, where it's executed as one trade as a net debit limit order. So you take the price of the stock and deduct the option premium and give them a maximum amount that you're willing to spend on that trade. Once we've entered the trade, we're not done. Then we enter position management mode. Now, most trades we won't have to do anything at all. But when those opportunities arise, it will make a big difference. If we know what to do, which we should, and when to do it. We have to take advantage of all these exit strategy opportunities. And they all start by buying back the option. Remember the 20%, 10% guidelines when share price declines. That will give us a parameter as to when to buy back that option. And then we take the next steps based on the information detailed in my books and DVDs. So let's take a look at some of the best products now to elevate the education process from beginner's corner to mastering the strategy. The best book is The Complete Encyclopedia for Covered Call Writing, the Classic Edition. This has been #1 bestseller on Amazon since it was published. Now, it is an intimidating book because it's over 500 pages, but the print is large, and there's over 170 color images in the book. You could probably read it in a couple of days, and then reread it a couple of times. That is the best book. That's the book you should start with when you're looking to master the strategy of covered call writing. Now, the best DVD program, and we're very, very proud of it, is a 4-part DVD, but we don't use physical DVDs anymore. We're kind of keeping up with the times. Very few people have DVD players now, so it's streaming. You set up a username and a password, and you can access it for a lifetime. It also comes with a downloadable workbook. And in my opinion, using this in conjunction with the Complete Encyclopedia Classic Edition is the absolute best way to launch your covered call writing career. Now we have a couple of advanced books for covered call writing. Should start with the Complete Encyclopedia Classic. But on the left side of your screenshot, you could see that I've also written a volume 2, which are 96 journal articles that I published after writing the Classic Edition, and then put into the same chapters you see in the Classic Edition. So it's more examples, some updated material, and although the Classic Edition is the one you should start with, you will also benefit from volume 2 as well. On the right side of the screenshot is the Covered Call Writing Alternative Strategies book, where it's covered call writing like strategies, or covered call writing with a twist. The 3 strategies discussed are portfolio overwriting, specifically for those who want to write covered calls against long-term buy and hold portfolios, where your shares are probably at a low cost basis. You don't want to sell them because it might create some tax issues. So we discuss how to use covered call writing in that specific scenario. The second strategy discussed is the collar strategy, which is covered call writing with an additional put that's purchased to protect on the downside. You make less money, but perhaps sleep better at night. And the third strategy is the poor man's covered call, where instead of buying a stock to sell options against, we buy a long-term option. So the cost of the option is lower than that of the stock, therefore the return on capital is higher. Now, there are a lot of moving parts to the poor man's covered call. It's not simply covered call writing, but cheaper. So before you even consider using that strategy, be sure to read that section of this book, Covered Call Writing Alternative Strategies. Premium membership will save you a ton of time, plus it has a big educational component to it as well. Go to the website, thebluecollarinvestor.com, look for the premium membership link to get more information. There's a file you can download for all of the benefits premium members get. Most of the benefits are up here with the stock report, but you could see we have a lot of files down here. Emergency management report as an example. There's calculators here, white wash sale rules, things like that that are available to premium members. And then we also have a big video educational component. The Ask Alan library, it says 140 here. We're up to 160 now because we add one every month. And so those are all educational in nature. Plus we have Blue Hour webinars. It says 6, but we're up to about a dozen now. And we add a couple every year. So those are available only to premium members. The big benefit is that you'll be saving a lot of time because we'll do all the screening for you for both stocks and exchange traded funds. Here are some free resources on the Blue Collar Investor website. Number one on the top left is a Google search tool. I've written over 400 articles on covered call writing, so if there's a particular topic you're interested in, just put the topic there and the articles I wrote on that topic will come up. Number two is a glossary that I wrote for covered call writing. Feel free to bookmark that. Number three is the free resources link, which is where you can access the basic Ellman Calculator and its user guide for free, plus additional files. 4 and 5 are some training videos, and there's a few Ask Alan videos, but for the entire library of, at this point in time when I'm making this video, over 160, those are available only to premium members. We do have a few on the general site. Number 7 is the Beginner's Corner, which you're looking at right now. There's also a Beginner's Corner series for those who sell puts. Number 8 is just a change in language for the website. We have members in 89 countries outside the US. Of course, that doesn't apply to you, or you wouldn't have made it through 8 lessons so far. So all I speak is English. But just in case you're wondering what that's all about, we do change this into 80 different languages with using that link over there. Now to contact us, of course, the website is thebluecollarinvestor.com. You can email me directly at Alan, A-L-A-N, at thebluecollarinvestor.com. And the BCI Managing Director, Barry Bergman, can be reached at barry@thebluecollarinvestor.com. That's the best way to reach us. We also have a phone number. You can leave a message. You can see it at the bottom of the screenshot over there. And we do our best to answer all the emails. It's getting more and more difficult as we get more and more each day, but so far so good. We've been able to get all these responded to. So that, ladies and gentlemen, ends our Beginner's Corner Information Series, the 2nd edition. This was lesson 8. My hope, of course, is that you've been inspired to look further into this strategy to generate cash flow and beat the market on a consistent basis. There is no one strategy that's right for everybody. But for those of you who want to take control of your financial futures using stocks and stock options, you should give this strategy serious consideration. I've been using it now for more than 2 decades, and it's made a big difference for my life and for those in my family. And now I've touched the lives of thousands of people from all over the world. So I feel quite fortunate. And I hope we can do the same for you. That's, of course, up to you. But I respect the fact that you've made it through this 8-part video series. My hope is that you enjoyed it, but even more importantly, I hope you benefit from it. Please do keep in touch with me. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.